All right, so let's finish off at least cost basis. Last time we talked about all three of the different elements that create the Potter box: um, cost basis, the floor, the ceiling, sellers, buyers, all that. Um, and of course, uh, we discussed, or rather looked through the charts, looked through a couple of examples of how we go and identify those things, as well as candle closes dropping into boxes, et cetera, et cetera. But what we're going to do in this, and this is hopefully going to help you guys start um, telling a story, right? Because at the end of the day, there's something that is happening, right? And with cost basis, that's supposedly containing the majority of that volume. So when price moves through it, right, where I've said and you've heard me say that it is distributed, right, and that's what gives price action momentum and the volume it needs to continue moving forward. And from a seller's perspective, right, we have to look at what is trying to be accomplished, right, and at any given time, if a stock is not moving up, right, a lot of the times that is one of those things where people look for opportunities to push it down. And it's also just, traders who, I mean, I think we fail to actually acknowledge how much volume and how many people and how much money is circulating in this market. So when it comes to day traders and, massive amounts of money getting thrown in both directions, that really is happening. And so the way that I look at it, right, is there's a story here. And as far as selling is concerned, everybody needs to know what sellers do, right? And I've talked about this in some of the previous classes, but sellers borrow shares at a higher price, right? So for example, if you were a seller and you saw candles pushing in here, you might add or put in a position to short right around this mark. And of course, you're borrowing shares at a higher price, hoping to buy them back at a lower price, and you collect the difference. If it doesn't make any sense, that's because it doesn't. But that's what rich people do when they're trying to make more money off of shit. Period. They literally just make shit up. You look at Michael Burry and what he did. That wasn't even a real thing that you could do until they made it a thing. And if you have enough money, you could make anything a thing. But from a seller's perspective, if I'm pushing price down and price retraces back up, and you can look across the board at these sell levels, and I am actively trying to borrow shares and push price down. And at the end of the day, I talk about what needs to be accomplished, right? Everybody has a job to do. Sellers have to pass that baton. And I didn't put this on there, but you can see there's a rather clean box right in this area. And this box is sitting right on top of it. And it goes to its cost basis. Of course, what? Is there sound? Oh, here we go. Price is, and this is where a lot of the times I tell people I'm waiting to see how price reacts. Because when you are in a box or you pull back into a box, you can speculate like I did with IWM. And so far with all the news over the weekend, we might be good to go. But with, hold on one second. It's better on PC. Mic check, mic check. Damn it. Okay, sorry. I had an extra mic open. I was trying to make sure that no, not you guys. I was making sure the recording was good to go. But anyway, if I'm a seller, my job is to push price down and pass the baton. When price moves down to cost basis, you can see right here, it bounces. That was your opportunity. And how many times? 1, 2, 3, 4, 5 times you attempted to push price lower. So what's happening for a seller? If you can't, or price is not continuing down, you can't send price and close price underneath. This is where if you are borrowing shares at a higher price and it goes above your average, typically when I sell short, right, or I'm borrowing shares higher and looking to exchange them lower, I'm doing that on margin. And margin is basically borrowing this shit from a bank. And if you start losing too much money, that bank's going to come a calling and they're going to want collateral. They're going to want more money. And so, especially if you're in a massive position, I mean, millions or hundreds of thousands can get wiped out in a second. That's where you have, yes, the possibility for infinite losses, but you also, if you're going to get out, you're going to cover. And this is actually one of the reasons why I go after stocks that have empty space above them, right? Why would I do that? Because if something has fallen massively, right, people, for some reason, will continue to feel bearish. They don't acknowledge what it's hit. They don't look at where it's at. They just look at a stock that's dumping and they think it's going to keep dumping. And you might think that's too stupid to be real. That's real. That's a real ass thing that really, really happens. So I look for those opportunities where consolidation is happening. It is pushing price down at the lows on a weekly floor. I'm licking my chops. I'm like, yes, sir, because I want traders to think it's going to go lower, because ultimately it's that pressure that we talked about Nike, and Nike was a perfect example, wicking below the floor, letting sellers get what they want, but nobody looks underneath them, or not very often. And so when that floor gets hit or something gets bounced off of, completely wrecked, right? And that's where that fast, you put your, there is no difference between you sitting in your chair and them sitting in their fucking Herman Millers. There's no difference. You are, maybe besides the Herman Millers, and they have multi-millions, but as far as the people are concerned, a fast move in the opposite direction will still scare the pants off some hedge fund dork, some institutional, trader. No, I'm not moving my cursor. Now I am. So all of this, of course, right, is, to your point, SR, this is, I have a Herman Miller too. I fucking hate it. It sucks. Yeah, I'm getting an Anthros chair. But anyway, there's no difference. So when you see, yeah, I don't like it. When you see price move down rapidly and then jerk itself back up, if you put yourself in the shoes of a seller, this is a terrible place to be, because this is what allows price to move so quickly, so fast. Because think about, let's put ourselves in the position of a seller, right? Your average is up here. Maybe you decide to add to that average, or average down a little bit lower, right? That gets blown through the water. Price moves up. You find no resistance whatsoever. So now you're negative, right? You owe money to the bank. If that continues to go up, right? People will hold through this. This causes a seller's, or a snowball effect, where one large order, one big guy decides to get out, and all of a sudden, you are exactly a stampede. You have a stampede of sellers trying to get the fuck out, and this creates rapid price movement to the upside. But what also happens, because we see big green candles, we buy. This also continues that stampede. So from a seller's perspective, the reason that we are looking, it's not just a box. It's not just like this. There's something really happening here. So it's one of those things where if you understand or can narrate the story of what is happening on that chart, sellers have been continuously trying to push this down and they failed. We have empty space above them. And so that's why when I look at the 24-hour, I say we're drawing a line in the sand. Because there are places that we can definitively say that's where sellers are at. IWM, dropping and closing underneath that big ass red wall that we talked about as well. That's a good example, right? So, and what I said last week is like, over the weekend, and this is something that actually is really good to think about. If you end Friday, right, on a big leg down, but you don't, like, say you move down and you stop right at a 24-hour top or a box underneath you. The next day, because again, or maybe over the weekend, right? Something positive happens and you gap up back on a floor. A lot of the times people will try to go for that gap fill, but it's highly improbable that that will happen. And if you think about the mechanics of what just happened, you convinced everybody on Friday that price was going to continue moving down. And then open up on Monday and you're fucking red. Bad. And so you're waiting at the bell. And this is where we get the gap and go, which is why I've labeled above resistance, gap up above the box, go. Gap up above cost basis, go. Gap underneath a box to the bottom of it, you will fall. It's literally as if, and it's not as if there is, but there are computers that are requiring that price opens up to deliver that volume that's sitting there on that floor to continue moving forward. And if you open up where sellers need to defend the price, right, or under a floor, it's not much to try to push that price back down. And because you're opening up, right, it's typically a quick move down and then you'll bounce. And that's when you'll try to make that attempt on going up. Because typically on any major gap up, like if you go, I'll try to find this example here on Tesla. But Tesla did this. It gapped up. We took a trade. It gapped up through empty space, went to the bottom of a box, pulled back the first day, maybe about 25% of that whole gap up, held a box for 3 days, and continued moving forward. So the lesson here, the simple lesson, right, is that we are looking for opportunities to catch sellers off guard. So, I don't need to move, at least, in this example, the charts will speak for themselves. In terms of, well, actually, let me stop and give you this example. I made close to $50,000 on Nikola. This was when this was down, right? This was after all of the crazy shit, and I mean, you couldn't tell me nothing. I was fuck Nikola. I was fuck Trevor Milton. I was, gang, Nikola dies. That's good and all. And was I right? Did it go down to pennies? 100%. I ended up losing over half of all of that money because I forgot one simple thing. There's only so many shares that you can short. And when something is trash, I'm not showing you guys charts. I'm just talking. Yeah. No, no, no. I'm not even looking at the chart, guys. I'm just explaining. Yeah. So Tesla or Nikola was a company that, I'm sure you guys all know. It was like trying to be the next Tesla. They got caught with fake videos of electric trucks rolling down hills. Like, it was crazy. They ended up, funny enough, again, if you fucking find a company named Nikola when you have a major car company named Tesla, I mean, it'd be like naming my car Henry to rival Ford. Like, you didn't see that in advance. But that's, again, we're dealing with a massive amount of people who are not really using their noggin. But this thing rips from, its IPO or whatever up to like 90. People are ranting and raving, and then all of a sudden this fucking Hindenburg report comes out, and all of this footage starts coming out, and now there's more people like Hindenburg, calling this company out, and the shit hits the fan. I'm having a blast. I'm making money. The stock is dumping. I'm waking up to fucking huge trades, huge amounts of money, and then I decide that, well, This chart setup looks good. You know, we've been bouncing around this thing. It's at the lows. I'm going to go ahead and give it another shot, right? There's got to be another leg down here. Boy, all I had to do is go look at the short volume and the amount of shares that were shorted. That shit shot back from, I think, $20 all the way to 60. To 60. 20 to 60. You would have thought that that was the greatest stock on fucking earth that day. But you know what it was? Purely and utterly mechanical. And if that doesn't tell you anything, that should tell you everything. That it's just about money. So if you have all the shares shorted on the most bullshit stock that could ever fucking exist, and nobody can buy short anymore, right? Well, it's going to go back up because guess what? Somebody's going to cover the short. Huge green candle. That's going to fucking get somebody else out who shorted after, you know, at the lows. That's going to cause a big green candle. And then the shit starts until that volume, you end up losing that volume on the short side. So exactly, snowball. So here's that is a real thing. Has nothing to do with fundamentals, has nothing to do with anything. Indicators typically won't tell you this shit. You know, it might tell you that it's underbought or you know, oversold. Excuse me, underbought, what the fuck? But it's oversold, you know, all that other shit. But I watched as an indicator told me that Tesla was overbought for fucking a whole year straight. A whole year straight. I remember people being like, the MACD's gonna roll over, guys. Okay. Tesla was like, roll D's, and it kept going. So it's like, this is why I lean and emphasize that this is a mechanical thing. This is why I focus on point A to point B. Because if there is a mechanical feature, empty space, tension, that volume pushing down price, the only thing that can stop that wild momentum from after it's left at consolidation is a lack of buying, which typically happens on really low volume stocks, or the box above it. Imbalance here and there, but the box above it. You need the volume within a box to push back. So knowing this and acknowledging this lets us know that, again, we are using or acknowledging something that is mechanical within the market. If sellers can't do their job, it doesn't have to be oversold. It doesn't have to have all the shares gone. But if it is not, if they are unable to accomplish their job, they will be pushed out of their positions. And that makes it go up. And so if we can remember that simple thing, right, and describe the story, especially when you get towards the end of the week, you know, or you're charting on Sunday, same thing, right? We're looking at how much tension, how much pressure has been put down on that particular stock. What did you see? You wanted to check to see how many stocks are being shorted. You can go to what is that site called? TTI uses. Oh, it wasn't the volume of the put option. It was the shorts. There was no shorts left to buy. Finviz, that's right. There was no more shorts left to buy. Like there is a certain amount that you can short. You can only this was the whole concept behind the GameStop thing, right? Is that they were doing naked or was it naked shorts or something like that? They didn't have the shares, the correct collateral to actually do what they were doing. Which of course, yeah, they attempted to squeeze that thing in outer space because of it. But you just stole the words out of my mouth. There's several different places that you can find this one. You know, he just posted high short interest NYSE. There's several websites and places, you know, and that's something that that's actually something you can do. Now, I'm not discouraging anybody from doing that ever. If that's something you want to go and explore, go look for stock. I did that on Tesla. This was back when, was it Twitter? I think it was Twitter. He bought Twitter. The short volume it didn't run out of shares to short, but it had risen so much and fallen so far. I remember there was this older guy. It was like Floor Broker on TikTok. Some of you guys might remember, bald guy with a beard, with a scraggly beard. And I remember, like, you know, we were cool. I didn't ever have an issue with him other than I didn't think he was any good at it. But just in terms of like, he just he would be like, I'm shorting Tesla. That was when he decided that it was a good time to short Tesla. And I was like, okay, that's wild. But regardless, looking at the short volume had risen so high and it had so much empty space above it. And at the end of the day, right? Like, yeah, Tesla, Elon, numbers didn't really change. Things didn't really shift. So at the end of the day, that was just an easy recovery for Tesla to make. Especially given it's so odd. It's the people who want to drive the stock down that inevitably oftentimes end up being the main reason that it goes back up. So, but from a seller's perspective, right, is a perspective that you want to think about in terms of basically being liquidated. And so if you can put yourself in those shoes, right, this is typically where you can measure or gauge the potential behind that stock. And not only that, if just going back to that main lesson of if they can't do their job, they quit. And eventually, I would say it's very rarely will you ever see a stock sitting on a floor, boxed up, and go down. Boxes typically are accumulation, and it's realistically only the lowest of the low, the bottom of the barrel stocks that will build a box, giving people the opportunity to buy, and it doesn't do anything. But on your vast majority of stocks, if you fall fast and you hit a floor and you go sideways, you're going to go up first regardless, even if that stock is due to go down. Because oftentimes it's in a seller's advantage and an institution's advantage to drive price higher before you drive price lower. And you'll typically find that on any major leg down, right? You could look at the chart that you're looking at right now, right? Fat red candle, big wick up, right? Before you go down, you typically go up. You could say the same thing here, right? Big pop up, big wick outside, you hit something. Next day, big red candle. So, and just the same way that you typically go down before you go up, which is why, contrary to what a lot of people like to hear or like to see, I want stocks to go down if there's empty space underneath me and leave the box that they're building above so I can use that to take the trade to the upside. So, all right. Now that's from a seller's perspective, right? And it's worth doing, right? Because I obviously, from a buyer's perspective, we have to look at it in the same way, but basically in reverse, right? From a buyer's perspective, a lot of the times, or even most of the times, we're reaching down into cost basis in order to find that volume to continue moving forward. And so we use this structure underneath us to, again, acknowledge where the volume is at and where ultimately it will fall. So from a buyer's perspective, that is the main source of your volume. So it typically, if not always, should respond. But from a buyer's perspective, heading down, right, is the same thing as heading up. So I'm sure there's a lot of you in here who have taken positions because something was ripping green, right? And all of a sudden it goes red. And now you're stuck. And then you have to, you almost go through the 9 emotions, whatever, anger, grieving, acceptance, and then you finally sell the fucking position. But the same thing, right? The 5 sides had 9 stages. Well, life's pretty heavy. No, I'm just kidding. But yeah, the 5 stages of grief, right? You have just this same thing with a seller. I mean, you take a position, it's moving in your direction and immediately reverses in your face. It goes underneath your average. You're turning red. You don't know what to do. And remember, for some of you guys who have been in here for a long time, you know what to do, right? At least some part of you can pull yourself back together and do the right thing or get out of that trade. But some people let shit go to zero. For real. And I'm sure every single one of us in here has done that, something that we could have cut, that we know we should have, and that it went the opposite way. And most of the time, people do. They panic sell. And so, from a buyer's perspective, right, when the volume that is holding you up is no longer able to support you, that same volume is used to drive price down. Now, of course, if that is where your storage is at, that is where your volume is at, and it fails to support you, right? So from a rock climbing perspective, this is like an avalanche. And if you can't go back, if base camp gets fucking overrun, your supplies are cooked. You're heading down the mountain fast. But other than that, you have a failure to hold price back up. And of course, this drives buyers out of their positions. This is the whole concept behind that punchback, is that price is pushing buyers, enthusiastic buyers, out of their positions. And you know what I think is also really funny? Is if you go look at the Qs, not this drop, but the previous big one, 4 days we sat up above that previous high. I talked about this yesterday. 4 days. On the final day before you die, you go up, you hit a new high, and you completely melt down. Or excuse me, you don't melt down. You just sit flat. And for 4 days, at the highs, they got people trying to, they're trying to take it higher. And you sit there for 4 days, and this is where that sudden jolt down, you look at the days following, right? The Qs on that dump. You get 3 days. This is when you know that sellers are serious, because they have to put their foot on the gas pedal, because this makes buyers scurry. It drives fear into the market, even if it just means for the 1 minute chart, right? But the same concept applies. If price moves down and pushes below where you were supposed to balance, or let's just say this, your average is lost. So if the majority of the volume or orders or shares are at the 50% mark, then that means that group of volume, that's their average. So when you take out the average of everybody, you're going to get some participants when it comes to selling. And selling leads to selling. And selling leads to more selling. Now, people are more apt to buy than they are to sell. So selling is typically a short-lived event. You don't get to just, unless there is and this is where people get this wild idea that like market crashes and pullbacks and dumps are all different things. A crash is, what happened in COVID, but is ultimately fueled by something that threatens the very existence of the stock market. And a global fucking disease that shut everything down, or virus, or whatever you want to call it. We're not going to get political here, but that is something that threatens the very existence of the stock market, right? Even 08, you got that much institutional fucking bullshit, but here comes daddy government to come and fucking bail all the big banks out and make everybody happy and warm again. While mom and dad just lost their brand new house in the subdivision. It's cool though. So from a buyer's perspective, again, this is where that snowball effect is still in play, and why we still look for empty space. Because if we can acknowledge that boxes and imbalances are the only place that volume is held, then empty space is the only place that price can move fluidly. You'd almost think of boxes as like gladiator rings. It's like once you step in there, I don't want to step in there. I just want to walk to the door and like get my shiny badge and walk away. I don't want to have I ain't got nothing to do with what's happening in there. I'm point A to point B. I'm out. I'm taking you to the gladiator, box. I'm not going in. But now, we also have to look at this from the other perspective, right? Because we know that when sellers pass the baton, they're giving their volume to sellers at that 50% mark, and they're doing their job, right? Literally, I'm handing you the package, you take it to the destination. But the same thing goes right? And we talk about this in the rock climbing. A lot of you heard me talk about this, but we talked about this from a rock climbing perspective. That the volume, in order for us to keep moving higher, right? And sometimes we have to come back for more supplies, but in order for us to keep moving higher, we need to see price move towards that 50%. And this is where buyers load up on volume. You might see some fight around both the floor and cost basis. This is sellers defending, but ultimately it is there that buyers will be, that is where they accomplish their mission. Now, one of the most beautiful things about this strategy is that stop losses can be set on these type of areas on the 24-hour time frame, because had you gone long, on the floor or on cost basis, that would have been a suitable stop loss. Of course, long term, equity wise. But is everybody following me here so far? Again, the point that I'm trying to make here is that I want you guys to be walking through the charts and trying to tell the story. One of the best ways to do this is with somebody else, to describe to somebody what it is that you see verbally, even if that means it's yourself. That's same thing. But like being able to narrate and say, hey, sellers are what are sellers trying to do? What's below? What are buyers trying to do? What's above? And what do either one of them need to accomplish in order to move in their respective directions? You would wait for that candle close, for the candle close to stop out, depending on the position. Yeah. I also don't trade into new highs for this reason alone. Very often, if at all. But if I was in equity, right? Equity is a little different. I use floors and cost basis for sure to buy. If I had long-term options, months, this is the 24-hour time frame, but weeks or, even a month out, then yes. If I had time and expiration, even through that 1 week down, I got to let that cook. I have learned through bad experiences and suffering that the worst thing that can happen is that is somebody really at my door? Hold on 1 second. I'm not answering. I'm not going to answer. I'm just gonna be quiet. Might be BlackRock. Oh no, it's the church people. It's Saturday at 5:40. Oh man, I have a copy of the Quran out here. Oh, and I have the whole thing that people wear. I have the fucking I'm sorry if I'm being disrespectful. What do they wear when they go to the big rock? They're like dresses, but not dresses. You know what I'm talking about. I got one of those. I should come out. I should go out there right now. No, they love garlic. I think that's why they keep coming back. If you're watching this years from now, hopefully they didn't get me. Give them their donation / offering. When they try to give you the bottom hand of the Quran, there we go. If they're hungry, feed them. I will. All right. Anyway, all right. I think they're walking away. No way. No. I'm watching him on my Google camera. Dude just put his ear up against my door. Oh hell no. He just put it closer, not like up against it. He just put it closer. You know what? I'm just gonna talk. Allahu Akbar. Okay. All right. Anyway, let's go. All right. So that's it, right? In terms of I couldn't help myself. um but this is again just trying to um uh describe, not just look at something as if it's a box, but what is trying to be done And how can you make money off of typically either the opposite or whatever it is that they're trying to accomplish? But I bet you're watching. Maybe that's how it works. That was funny. All right, now, um, this is much anticipated, I'm sure. Um, but we are going to cover our waves. And this is going to be something that we're going to go through stocks as well. So this we're going to be I know this is one that a lot of you guys struggle with. This is important. So grab your glass of water or whatever you need, because this is one of those ones that we're going to go over. I'm going to really dig into. Please ask as many questions as you can or as you see fit. But this one is a good one. So, all right. Now, I know a lot of you guys have heard me talk about waves in this course and on my channels and in my trades, but it is a very simple concept. I did not come up with waves, right? It's not something that was come up with. It was something that was observed. And of course, the way that I've adopted this is, you know, I put my own little twist on it, but the idea is that typically after 3 waves, 3 taps on anything, your probability of breaking has increased. But not only that, this is what defines a box. So a study of Elliott waves, pulses, or ACBD, but a simple concept, a study of Elliott waves, pulses, or ACCB, but a simple concept when applied to our strategy, applied in trend or consolidation, right? So it is, again, it's not complicated. It's counting the point of contact. How many times in this channel, how many times in this range have we tapped this box, this channel? And that typically is the first, okay, time to start looking. What did we take this last weekend? And even though it did go up to my entry, I would do it again. What was it? Pepsi. We'll take a look at it in a minute. But Pepsi is something that has truthfully gone past, right? Maybe on the weekly it's still fine, but it's gone past that. And when you get past the 333, or you get past 3 points of contact on both sides, that's typically when tension is at its highest. And at any point in time on one of the next points of contact, the probability of you breaking is high. So that's typically when, if you've gone past that 3, I know that the contracts have gotten really cheap, and that typically provides an opportunity for me to get into that trade with really low risk. So this does not promise that either side will break, but the concept of exhaustion, where buyers and sellers do not have any more volume to break up or down. And this is what it is. Inside of a range, you are at war, right? You are there's accumulation and distribution and high volume on both sides of the range. And it's tough to break out. It's, people take people taking those breakout trades provide that volume. So it doesn't confirm, right, that one side or the other is going to break, but it does tell you that it has reached a point of exhaustion where, yes, if it doesn't break on that third side on the top, so if you reject the top for the 3rd time and you've only tapped the bottom for the 2nd time, okay, you might need to go ahead and start looking, because on that 3rd breakdown, and this is oftentimes when I bend the rules a little bit and I will take a position in the box coming off of the rejection of the top, or if it's the opposite with 3 off the bottom and 2 off the top, that's where I'm looking next. So finding the side that is heavier can give you an indication. I don't know why I put indicator there. Indication of the next break. So, like I said, if you go and you count over here in this example, 1, 2, 3, 1. So you got 1 here, and then you get 2 in one range, right? So you stay up there, you try multiple times, but ultimately you get that 3 attempts heavier. Finding the side that's heavier, the side that has already been tapped 3 times. First. So look, first, second, third, second. Right? Now, typically if you have this phenomenon, and I've found this to be true pretty much always, if you have this phenomenon, what you'll typically do is you will bounce off that floor, but you will not break over cost basis because your rejections have already been accomplished, and sellers basically control the upper half of the box. So it would take a great effort to basically, but yeah, more hits on one side. And this is a simple, don't overcomplicate this. If you have more than 3 fingers, you can do this. If you can't count in your head. If you only have 2 fingers, borrow your wife's or husband's or a friend. So, 2 ways that we can apply this theory, right? By 2, in a trending market with volume, we'd like to see the third wave be the break, right? So the third wave break, so either resistance or support is hit for a third time. Typically, if you hold or bounce or reject for a third time and move through the 50% mark, you will see continuation in that direction. And this is something that occurs on every single time frame. Down to the 3, 1, 2, 3. Now, I will say this is actually a trade that I took. I remember this specifically. I don't know if Jorge is here, but he took this one with me. And that oftentimes just isn't a heads up. It's hard to remember, right? Maybe write it down on a post-it note. But on the ETFs, if you ever see a floor being attempted to be held and you reject 3 times and you hardly have only gotten a bounce off the floor, there's a good chance that you're going to make a quick move back down. Especially if you spent the majority of the day sitting up against that wall. But again, the point is true that it doesn't matter what time frame, that these waves typically hold true on your third, maybe your fourth, but typically your second or your third, your third or fourth tap. You are looking for continuation in that direction. And yeah, if you do have 3 on both sides, get ready. It's coming. Now there are variables in this that will hold, like if you go look at HIMS is, I forgot actually how many times it's bounced on either side. This is where I set alerts, because if I try and I fail, and I actually am still short on HIMS. I was up like 10% on 45s for July 11th, which with how consolidated it is, I am forced to take a longer expiration, because keep this in mind, any contracts that expire within 25 days, that's when theta starts to do work. 25 days out. So if I can get outside of that 25 days, typically if I'm in range and there's back and forth, I can avoid that scraping and kind of stay on the outskirts waiting for that move. So 3-way break, or so either resistance or support is a hit for a third time. Typically, if you hold or bounce or reject for a third time and move through the 50% mark, you will see continuation in that direction. I spelled that wrong. This concept is applied to all time frames. Range is range. Once you've maxed out these range volumes, something has to break. Tension. Past 3 waves can be considered a high tension trade. Contraction, expansion. If 3 comes first at the top, then the rejection led to the bounce at cost basis, and that did not prove that volume needed to move up, giving sellers control, right? And that's ultimately what is happening. If cost basis off of that third rejection is completely flushed through and you're moving fast towards support, at that point sellers have the ball in their court. So even if you did get a bounce, they would have to monumentally respond. But typically, I would say 90% of the time it does not, because you've already. So I can actually explain this concept. When you don't go to your floor, okay? When I pull back to something that has volume. If I pull back again and pull back to nothing that has volume, I'm still using the same volume. So then I go up again, still using the same volume. I pull back. Where do I go to? The old volume that I left behind by pulling the volume out of here that I've already expended trying to get back up. So now I get one last pop. All the volume that you could have or should have put at cost basis, you've expended to try to just fucking get higher. You're filling orders at that mark, basically pulling money out of the range that's holding you up. Does that make sense to everybody? Can everybody follow me here? So if you don't go and touch a floor, what are you bouncing? What are you using? You're using the same volume that you were using when you originally bounced. So there's weakness there. Just like consolidation waves, we see the same dynamics with trend. Actually, we're going to put a pause on this. That's a 3 minute? Damn. What's this? Okay. How y'all feeling? Everybody feeling okay? Not feeling, nobody's feeling lost, right? And not saying shit about it. You're banned if you do it. No, just kidding. I just want to make sure everybody's good as we're moving on forward, feeling good about it. I don't want you to. If you feel good about it, that's good. I just want to make you guys feel good. Well, hold on, hold on. You make me feel so good. I'm sending that to your family. Lord said, clip that. All right. I can feel it all the way to my bones. Oh man, we have fun. It's ruined. Good. All right. It's the good fun. The good. Feel good about it. Can you explain the 25 days till theta? Yeah, wife. So within 25 days, right? Theta is something that just it's time decay. So it means that the longer you spend not being able to be utilized or not in the money, then you're going to lose value because the probability as you get closer to expiration of you actually closing in the money is incredibly low or decreasing by the day. And so theta is measuring that time decay. And it's saying, okay, well, you had a month to get in the money. Now we got to our, we had however long. You had that long to get in the money, and now there's 25 days before this thing expires, either worthless or able to be utilized. God damn it. So it's able to be utilized, and that if it's not able or if it's pretty far away, then it decreases the value. Decreases. Could you repeat that for my side chick? I don't think she deserves it. Also, Ivan, I hope you know that that Patrick picture that you just sent in there will be forever in the Potterbox workshop. Just letting you know. Just something to feel good about. History. You're a part of it. It's good stuff. All right. So let's see here. What were we talking about? Points of contact. That's right. All right. So let's go through. Instead of me picking, you guys pick again. We're gonna go through and we're gonna see if we can find the 1, 2, 3s, or if anything, describe what is occurring in that range. Give you something good. Elf. I like that. I like it. I like looking at my money. This thing makes me happy, dude. A happy guy. All right. So theta decay is not so huge if 25 days. If there's 25 days left, decay increases. If there's 25, if you're past that 25, you have, time on your side, literally. All right. So this is actually a pretty interesting little dynamic here, and this is something that you might miss. Wouldn't 25 days on the contract add a lot of premium? I recall you saying to look for something under $30. That's not always true. B, if a stock has consolidated long enough, then there's absolutely a large list of stocks that will. Um, how much were Pepsi's? Pepsi was okay. So for that's the 27th. Yeah, so I mean that's the 27th of June, so I'm definitely within that window. Um, okay, so let's say XYZ 80 calls, $36 for July 18th. The longer you spend in range or the less that stock has moved, the more likely those contracts. I mean, I can tell you this. Here's what I can tell you. Every stock does it. I have, and Juan Jr. I think you guys, Alex, you've seen me do this. Jorge, Tesla. When Tesla does its fucking nasty ranges, you know how the contracts typically are like two, three, four, $500 right outside of the money. We have traded Tesla coming out of range 2, 3 weeks out or less, $25, $30, $60, not that far out of the money. I Tesla is something that it almost like kind of tickles me. Just like it is in its own way a meme stock that if it moves a fucking inch, everybody jumps back in it, and the volume on those contracts explodes. But it's also quickly dropped. It's like a side chick. I mean, or like like a fucking a one night stand at a bar. It's like everybody loves it, and then after you made your money and everything's all good and you're happy, you're out. It's wild, But it's the same thing with Nvidia. I think it has a little bit less of that um, dynamic, but host stocks, yeah, you could think of that. We could go ahead and coin that as a technical term. You have your host stocks, you know, um, and those are ones that generally. Uh, all right, Neil, get him out of here. Um, yes, fucked up. um, but yeah, yeah, all right, you guys get the point. Yes, that's it. All right, so let's take a look at Elf and let's count. So the first thing that I see is a nice little area of consolidation above, and this is going to be important because we have a small area of large area of consolidation below. Now, here's what's interesting about this is that, and we'll go and count here while we do it. So it looks like you could count that as one. So one, wick off of that, bounce two, one, two, three, one, one, two. Oh wait, hold on. Yeah, one, one, two, two, barely scrape, three. Now, oh, did anybody just get excited? I just got my autism just flared up just there. Listen, that shit. I feel like Jimmy Neutron right now. That shit tells you, like, if you really start to think about why'd you do this? Oh man, I'm getting amped up right now. Listen, it's so fucking cool. Remember what I just told you about not bouncing on the floor? You didn't go down and get the volume that you needed. Volume's down here. You just barely grab enough. It's almost like you half-ass the sack. There you go, swipe right stock. This does not go to the floor. Curls up, pops up, expends the last bit of volume that is contained in this box, right? Or it's pulling in buyers. Price goes up. The big boys who want this price to go down, they do their job, right? One, two, three. 3 wicks. Next day, engulfment. Next day, break. Ivan, I know you did not just sit, brother. I did get a tan yesterday, though. Were you there? So in order for it to actually go up, it has to grab volume on the floor. In order for it to more than yes, so like they're calling. There's got to be variables. Sorry if you hid your name on purpose and then I just exposed you. My bad. Why? Wait, hold on. Why are people's names dot 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 B dot dot dot? Is that my screen or is that real? Are you guys brother and sister or something? Nah, peep this. Help me out here. Look, look at these names in the chat. Okay, yeah, look at the C. No, no, no. I don't think so. I see everybody else's name. Maybe because I have long ass names. It's being shortened. Ah. Well, it even says that on your fucking real screen name. Like when I click on your name, you're just B with dot dot dot. Look. Unless you're trolling right now. Witness protection. Okay. Oh, okay. Oh. Bacon strips. Okay. All right, cool. I just want to make sure I was tripping out. No wonder you can never remember my name. Yeah, no shit. I don't even know who you are. Your R? That's gonna be rational. I can't see your name. It's just, oh, streamer mode is enabled. How do I do that? I'm just sitting here calling you the wrong names. How do I do that, Ivy? Help me. Never mind. There's a big button that says streamer mode. Pretty stupid. Oh, no shit. There you guys are. Wow. Okay. Anyway, back to what we were saying. We'll clip that. Probably not. All right. So this is a beautiful and to your question, Colleen. In order for you to make a sizable move without news, like say Elf got news that you know they were partnering with fucking God to do a makeup line. Perfect. Like that's fuel, and that would give you the volume that you need, and it would move to the upside, right? Oh, dude, Ivan, I have no idea. As far as I'm concerned, whatever's happening inside of my computer is magic. So, um, but they didn't pull the volume off of the floor, and they expended the volume they had, getting up to cost bases where they were refused multiple times. And this provided the opportunity for the punchback. Now let's zoom in a little bit. Let's see what we can see, because I guarantee you there's probably that same phenomenon here as well. Okay. Ooh. So one push up, one pull back down, gap up, push down, pop back up, gap up to the imbalance of that wick, pop back down. So you could even say, well, this was smushed in between two boxes. But the fact of the matter is, 1, 2, 3. And of course, you have one. Yeah, I'm not using the mouse right now. Ivy's using my mouse. But one bounce off of the top of this box. But again, remember where you're smushed in between. You're literally in between a huge box. And so being, price action between those two, you hardly have any buyers. And this is a good example of what I was just explaining to you. You don't go to your floor. You accumulate right before you get there, and you drive up, expend that volume, and you hardly had any volume. That just goes to prove what I just said is true, because you bounce off the box once, and that was too much. That was too much. Oh, dude, I'll show you my browser history right now. That's what I use the old computer for. Oh, I was kidding. But you only can bounce once. So you literally pull the volume out of that bounce, and now there's nothing remaining, and you dump. So, all right, let's kind of speed rush through here and just count, right? 1, 2, 3, right? Floor seems inconclusive, but they have 1 and 2 there. 1, 2, 1, 2, 3. Part of me thinks that this is in there. Son of a bitch. Oh yeah, that's enough for me. Pretty much the same tap. So you'll find this phenomenon pretty much in everything, right? It doesn't need to be picture perfect every time, but 2 to 3, you'll see on that third time, right? So it's 1, 2, 1, 2, 3. You're gone. Now I think this, yeah, this is where I took the damn trade recently. And the reason that I bought this, I know we've already talked about this, right? But the reason that I bought this was I already bought it. I like the stock as the stock is like I don't know anything. I don't know anything about the numbers. All I know is the people who care about the numbers like the numbers. That's all I care about. And there's a consensus. If I can find consensus in a fundamental area or a fundamentally sound stock and the chart looks good, like I was attracted to Elf years ago. Out of context, this would sound so wild, but I was attracted to Elves years ago. Loved them. Lord of the Rings was really good for me. But I liked them in comparison to Alta. I liked the setup, and so that brought me to the table. And then I remember Chad brought it back up, and I looked at the stock, and it was perfect. And one of the things that made it so perfect, because when he asked me about it, it had already experienced, right, a multitude. You'd gone past the real waves. In the most recent price action after you establish the range, you get 1, 2, 3, 1, 2, basically 3. I mean, kind of right here, 1, 2, 3, so maybe 4. The point doesn't matter, right? It doesn't matter. The point being here is you've surpassed that 3 times on both sides. Now, at that point, I'm 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 like a fucking stock market predator at this point. I'm dying to see what's going to happen when you hit the floor. Because sellers better step up. It's time to break. This told me all I needed to know. Breaking and holding above cost basis, and the way and you'll notice by my average, I have hold on, I'll tell you my exact average. I have a 55.14 average, right? 55.14 is right. I can't do it, but you got it. It's right there. I was using the structure. The candle closes in the box to my left, inside of the box, but the candle closes in my most recent price action to take that trade. Anticipating that because you had bounced so many times on the floor, and you had already rejected so many times at resistance, that because of the empty space dynamic above me, there was like, I can't begin to, like, I get a real, like almost like a rush when I feel, and I think that's years of knowing what a good setup means or it looks like, and then actually trading that from start to finish. It's like I have, and we are the trainers. We are our own brain trainers. Like we build neurological pathways, and the more we use them, the more they become our regular everyday pathways. This is why like people take mushrooms and acid and stuff like that, because it's, you know, after some point, it's the only thing that'll open up those neurological pathways, especially for, you know, people who are doing in the arts or science or anything like that. You know, I remember Tech Valley was fucking microdosing like nobody's business for like 3 years straight. But, you know, people build these, yeah, muscle memory. We build these neurological pathways. And so my bodily response, right? My brain's response when I see a good setup is the same as like, I don't know how to describe it. It's like, you know, before I get on a roller coaster, like I know this, yeah, like that's what I want right there. And I try to kind of emphasize that, you know, probably a little too much, and maybe the moans and stuff like that are, you know, but I want you to know That really looks good. You know, that's the kind of setup that I'm looking for. Um, and I think that even the way, like, some people I know get offended. Like, I could even say that Cade, like, if you're in the Discord, he brings me stocks, and I'm like straight up like, and that listen, I'm nothing against him, but I fucking hate those. Like, I could never. And I know some of them work, and they work out really well for him, and I'm really happy for him. But they don't give me that brain stimulation. They don't do what Starbucks did for me, where it's like, okay, that's going up, right? And this is actually almost identical to ANF, which is another setup that I took. Well, damn. Ooh, damn, I missed that one. When did that happen? Oh, no shit. Look at that. Right on earnings. Empty space above, straight to the top, back down. You might be looking at a punch down on that one. Ugh. Anyway, this is I would actually say this is identical. I took that. What, ANF? Oh, that's right. Oh my god. I did take that. Holy fuck. I'm like, nah, dude. Ah, damn, I missed that. I'm getting lost in the sauce, guys. Holy shit. Yeah, I guess that's a good thing. I can't keep track. I'm fucking dead. I'm cracking this beer open. Um, you know what? I immediately thought of the one that I took prior because that's not the example that I was looking for. God. Thank you guys. I gotta stop smoking. All right. This is a perfect. I mean, dude, there are trades that I legitimately forget about. Um, but there's also events that happen in between. I took one that took me a whole month of BP. Oh shit. Um, but yeah, uh, they blur together at some point. Every day pot get closer to being senile. I told you guys, oh, if I did an in-person class, I'd have to mega lock in. But no, I told you guys, sometimes I think it's fun to imagine that I'm actually homeless and like lost my mind. I'm just on the side of like a Target, writing on the windows and explaining to like a bunch of stuffed like animals and shopping carts. It's like I've drawn my computer on a box. It's a fun thought exercise, you never know. But anyway, back to my point. This is a perfect example of the exact same, almost, it's kind of scary actually now that I look at it. It almost literally looks exactly the same. This is the exact same setup, right? Little different area, but precisely same box above, empty space, right? And yeah, right. Let's see. Feel like I missed a question up there. I heard you talking about volume a lot. Do you think a volume indicator would be beneficial? I know you keep your chart clean and only use price. Maybe a volume indicator can be misleading. It can be misleading. High volume can happen. Well, fuck it. Let's do an experiment. Let's do it right now. 24-hour volume. I didn't know that was a thing. Uh-oh. Okay. So I guess my point here, look at this. What does this tell me? In what really was playable after it? I think the point, like, okay, you had a high volume, but you had a big green candle, which this is 24-hour volume, which if any of the volumes, I suppose, I'd probably use this one. But I think, like, what are we getting out of this? It's lagging. It's deceptive. That's right. So I think of it as like, you know what? if I just focus, like, okay, let's do this. I took my trade here. What would volume what would volume have told me? And in fact, if I used volume as an indicator on whether or not we were going to continue moving higher, how fucked am I? Right? You're just doot, 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 doot. Now, I used to observe something called average volume, right? Where it like kind of put a moving average over the volume. Is a VWAP a better indicator? I listen. I don't think you guys want to know my opinion on. I mean VWAP. I think VWAP. I think it's all. It just okay. If I'm making 1,000% trades, if I'm doing what I've been doing and it's working, don't. What do what do I need to like? Not that I'm not receptive to new information. If there's a way, if one of you figures out a way to make this better, or you create a fucking AI indicator that's like on the cool. Thank you. Time to make more money, right? Time to make more money. But here's how I found my strategy, right? I found it by getting rid of all of that. I found it by purely okay, all indicators, all all of it is derived from looking at the chart and maybe mostly trying to highlight something that you see on that chart, right? Or volume or price, your average price, right? To me, these are it overcomplicates it. I've been doing what most people can't do with none of it. And I think that my attitude, and I want you guys to know this, my attitude is an acting discipline. I am repeatedly telling myself and have repeatedly told myself these things because I wanted to try to use I had indicators. But I have, being in this place, I know how lucky I am to be able to do this and to be one of the fucking few. I mean, seriously, there's not a lot of people who can do this. So I'm not trying to hop onto, to explore outside of the phenomenon that I'm living in and trading in, you know. And keeping it simple is a main is the probably the most important feature, you know. A, B, target based contracts, that's it, right? And yeah, something that's interesting to think about, all indicators are lagging, but with the PBS you can see the move before. That is yeah. Yeah, that's a couldn't have worded it better myself. Um and so I found this indicator or found this strategy by looking at pure price. And so the more I did that, the more I focused on it, the better I got at finding good setups. And so I guess my interest would be in an indicator that finds me boxes, an indicator that finds accumulation, right? An indicator that highlights empty space. I'm down. Throw it my way. But other than that, that's just telling me prices, right? Or areas like that's what I would want a I'm ready for a computer to do half my work. Fuck yeah. Let it rip. But as of right now, not happening, you know. I've tried to work with AI, but it feels like it's just not getting it. So, can you set certain parameters on a stock screener? Yeah, of course. Yes. In this workshop in there's a class on well, yeah, hold on. Excuse me. Yeah, stock scanner essentials. I'm going to tag everybody in it. Okay. Watch that. Okay. I need to delete all these messages above. Ivy, can we actually clean up all? Well, never mind. Fuck it. Never mind. The channel, the chats, the slide. Yeah, they don't need to be typed in. I guess you know what? We just need to make sure that it's only questions in there. If they type questions for that particular class, that's fine. But I just don't want any commentary. So if you want to post like something like that, that's fine. Ayo, mom's almost is on her way home. Hurry up and panic and start cleaning. I'll wait for the last 15 minutes and go crazy. You know what I'm saying? That's where I do my best work. All right. A little bit of comedy in here, you know. I I think anyway, moving forward. These are examples. I mean, first of all, these are what good setups look like. Like this is what you would if you had a screener, if you were looking you are looking for a stock that has been at its low. There's stocks that have like 52-week lows, 52-week highs. There's a lot of different variables you can put into a screener. And there's been people in this Discord who have gone about creating their own. And they're pretty good as far as finding structure and stuff. So, yeah, sure. All right. One second. Kind of lost my place here. Okay, yeah. Let's get back to what we were talking about. All right, so let's just do a little bit more. You posted a pic of a setup that worked and asked it to put down everything's. Oh, no shit. Okay, Philo. Should make a YouTube video on that. That's pretty cool. Um, so let's do a little bit more counting before we go. Again, I just want to prove this point before we move forward. 1, 2, 1, 2, 3. Right? Break. Here. That's fucking still 1, 2, 3. Now, the resistance here is a little bit more deceptive, and I don't really feel comfortable even placing one down here. But it feels like it's 86.40, which you do hit 3 times, but regardless, the floor is that's just an unclean box. Let's go ahead and look at these waves underneath us or above us. 1, 2, 3. 1, 2, and of course, before you go lower, you go higher. This is actually, you know how little people, uh, oh, I should have paused there. Sounds like I was talking about little people. Do you know how few people actually have made that observation? It is honestly like if you go look at a lot of stocks, most stocks, this is true, period. So, just knowing this by itself is super duper helpful. All right, let's see what else we got out here. Um, yeah, throw me a couple more stocks. I want to quickly do this. Roku is gas. Dude, if you do not stop it. All right. Jesus Christ. Hold on. Wow. Dry spot in my throat. Jesus Christ. All right. Damn. Why did I just lose my voice or something? All right. So Roku, and I'm looking at the weekly here. Let's go back down to the 4 hour. Now, this is an example. This stock is okay, right? It's probably one of my least favorites because it spends more time, especially lately. Seriously, lately, moving incredibly slow. But we'll go down even into a lower time frame and start seeing if we can make these observations again. Just FYI, it is storming very heavily right now. So if I disappear, you know why. All right. So let's zoom in. I'm just going to go into a random price point here and we're going to start counting. Now this is unclean, right? But I'm going to focus on the waves, not necessarily the points of contact here, but 1, 2, 1, 2, third, loss, and then you end up punching back through your own box. That looks great, Ivy. That looks great. All right, let's go over here. Same thing, right? 1, 2, 1, 2, accumulation, 3. All right, now this is a pretty simple lesson. You guys everybody following me here? I would like to encourage, and this is your homework tonight. Simple homework. I want at least 3 piece. It's so easy. At least 3. Post as many as you'd like. Clean, well-developed boxes. Okay? 1, 2, and I just want you to count, right? Circle on the touches, X on the break. So I'll repeat that. I want you to find, we'll focus. You know what? Let's do this. I want 1 box on the 24-hour. I want 1 on the 4. I want 1 on the 1 hour. And I want you to find 1 on the 15-minute. Don't care where it's at. Don't care where you find it. Find that 1, 2, 3. Highlight it. Go from there. Are we clear? Everybody got that? I want to make sure nobody's asking me what the homework is. So, funny story. I think a year after I did all the Potter boxes, somebody was watching the classes back and like posted in the homework channel. And they were like, "Where's everybody's homework?" I was like, "Dude, you're watching this a year late." Time frames again? Yeah. We're going to do 24-hour. So I'll type this out. We'll do 24-hour, 4-hour, 1 hour, and 15-minute. Damn, Ivy. Fuck. How do I file a complaint? No, I was kidding. Damn. Ivy, would you be cool with cloning you? Let's make an army of Ivies. No, we just need to download your consciousness into AI. Guys, Ivy got paid American money this week, okay? She got an American paycheck this week. And her brother. They're getting paid, trust me. Tell them, Ivy, you're balling out there, aren't you? Ivy earns 50% union. Oh my God. Ivan, I don't know if I trust you with a clone of Ivy. I'm gonna be honest with you, dude. We'd have to have like some type of camera system set up. Just being honest. All right. It is we're at an hour 30 point. If you guys want to take a second to go grab some water, grab a snack, or whatever. We're not gonna go too much longer. I'm flirting with danger right now. My trees are fucking going sideways. So we got a few more things to cover. But again, homework. All right. So now I want to go ahead and discuss with you guys our. Can you guys see that? Are we full screen? Yep. Okay, cool. Perfect. Okay. Now, everything I just taught you is true in a channel. It's a little bit easier. Typically, on a third break of any channel, right, we're going to have, uh, excuse me, where's my presenter window? There it is. Thank you. We're going to have a 1, 2, 3, or 1 1 1 2 1 2, and typically on that third one in a channel specifically, it does quite well, right? I have found that on higher time frames, especially, that range true, but it's true almost on every single time frame, and oftentimes during a lower time frame situation or anything of that nature, I will use channels to find control and measure the 1 2 3 with inside of it. So just like consolidation waves, we see the same dynamic with trend or channels, right? The concept does not need to be overthought, and in combination with the PBS can be a dynamic way to play a breaking trend. Blah, blah, blah. All time frames, all time frames have control. It doesn't matter if you're in a weekly uptrend, right? You could be in a 5 minute downtrend. All of these are true, right? And so every single time that you're looking at a stock and it's moving, it might be creating a range and you can't see it. And a lot of the times when I draw the channel, that channel will start from the bottom and there will be only one touch, right? And I'll have two bounces off the floor. And that's where I mean, I've hit a lot of trades, even lower time frame swing trades on the ETFs by finding and locating these channels. When you have a maxed out trend or maxed out trend waves more than three, you can see a channel collapse and a loss of control. Now, this is at the bottom, right? So say you rejected there and you end up whittling down. A lot of the times that channel will go much lower. And this is puzzling for some people because oftentimes it will go down and then it will actually, it will respond to the actual channel. It will go and tap it. It will go sideways and then it will break up and it will use it as support. And then you'll resume. You'll see a large move up back into it. Recovering a channel is something I probably don't talk about enough, but it's not really the most important thing in the world. You know, like a collapsing channel or reclaiming a channel is especially and probably more or less a 24-hour weekly thing only. But regardless, this is something that you need to take into your trading when you're trying to find trend. How many times have you touched on both sides? When you have a maxed out trend waves, you can see the channel collapse and a loss of control. This typically shows a major loss of volume, right? Or a loss of buying volume and heavy selling. And this is a 3 minute channel, lower time frame, that shows the same dynamic and a break. So let's go and find it. And we'll start with our ETFs. And I'm going to be honest with you guys. There is not a lot of, sometimes there is no channel. Or I can't, rather, there is always a channel. I can't find it. I don't have enough points of contact, anything of that nature. But typically in a channel, we're going to start from the bottom and we're going to look for points of contact. We're going to do the same thing as we rise up. And oh, look, that's what I was just referring to. Look how you fall when you fall back into your channel, right? Pretty interesting. Excuse me. So on a weekly level, right, this is a channel that has, at least now, 1 2 3 major points of contact. 1 2 3 major points of contact. And so one could be speculating on, and this is where we get into a little bit of weirdness, okay? So I want you to keep things simple always and just listen to my words. Channels contract and expand. I want you to notice something when I do this, right? I just raised that up. Where did I raise it up to? More points of contact. Channels, right? If I was to go down and squeeze this, take a look. Channels are fractals of each other. So inside of a channel, you will find, and oftentimes you can do this, watch. Copy. Oh, wait. Nope. Oh, I know how to do this. Hold on. Shift. You hold shift. Nope. Nope. Hold on. I know how to do it. Don't tell me the answers. Control. Hold control, and it'll clone it. Yeah, there you go. If you hold control, it'll do it for you. And you'll notice that everything holds together, right? This is not something that I am doing on a regular basis. I am trying to find the most important points of contact. But when you start to expand outside of them, or you've gone past your waves, oftentimes you can find a wider version of that channel, right? But for the most part, we're still focusing on what is horizontal first. Channels are, their purpose is simple. We are defining what direction we are heading. If we have a target, right? So let's say, and I guess really there's not really a good example of, okay, so let's use this as an example. So let's say I drew this channel in advance, which I didn't, so I wouldn't have had this. But if I drew this in advance, and this goes for any channel, if I have a target horizontally that lines up with a channel dynamically, that is, and we're about to get into this, that's called a confluence, right? It's where two sets of data, two important levels intersect, right? And basically give you a strong target. So with the cues here, you know, again, this channel is something that I would just really be focused on as far as price or as far as control. And if that control was lost, or say we were to go and break over the high, I would expand that channel up ever so slightly. But for the most part, when we're tracking channels, you're going with the points of contact, and at that third or 1, 2, 3, that's when we start to see some silly shit. And that's why, I mean, right now, with the cues and everything else, I'm expecting some weird shit. You know, I find it interesting how we're acting, or how, you know, price is behaving. And this isn't active price action; we're still in replay mode. But how price is responding. So, all right, let's take a look at IWM. Now, this is something that appears to have broken its short-term downtrend or uptrend. Let's take a look. Beautiful. Let's count. 1, 2, 1, or 2, 2, 3, 3, break. What do I mean by silly shit? So price action will price action typically on the third, like let me show you what that means, right? After we've gone and hit the 3 times on every side, silly shit, I'm just meaning sideways action. Like you don't really pick, it's typically an area of indecision or just consolidation. So like with the cues right now, right? Now I just fast forwarded it, and as you can see, that third fucking break ends up being that break, and then you gap up on the floor of that fucking channel and the floor of that box. Lo and behold, this is what we're dealing with. But at the moment, right, silly shit for me is typically when you hit that third, you're not always going to get an immediate straightforward move, and that's really observable on IWM. You do hit it for the third, you do bounce, but you fail to reclaim anything above you, which then shows that buyers are obviously unwilling to grab the price above them. They get exhausted, they fall, it goes for the fourth, and it breaks. The channel is spent. So but the main point here, or the most important thing that I'm just trying to point out, this is a tool that we use. This isn't like the law. There's some charts that I trade that don't have channels. Starbucks did not. I did not draw a channel on Starbucks at all. So, you know, like that's something that I didn't see it. I didn't draw it. And if I don't see it, I don't care, because if the setup is still right, I'll still trade it without a channel. So I want you guys to know that this isn't the most important thing. It's important in when establishing which direction you're going to trade, because if you're in an uptrend, the most profitable moves are up, not down. In fact, you'll see that this is riddled with more up moves or more big pops up than it is down. Most of the red candles are pretty shrunk. You notice that? They're pretty, I mean, this is the weekly chart, but it is in an uptrend that it is best to trade it up. I don't like going against the grain, typically. Unless I see something like a candle close underneath a major level, like I did with IWM, right? I took IWM, especially look at the weekly. You went up, you retested, and you failed, and then you closed back underneath. So horizontal levels obviously are going to be the most important. But channels, yeah, they have their place. They have their use. I mean, even here, I mean, there's a channel right here on IWM. Same thing. Collapsed, reclaimed. But after that third, 1, 2, 1, 2, 3, right? This is, again, you reclaim the channel, but it's not necessarily in play in the same way. So when we're in channels, we're using correlating price targets, right? Again, confluences, which is what we're going to be talking about in the next class. So you have an incomplete picture right now. But if I have a horizontal level, which always comes first, which is always most important, and it aligns inside of a channel. Once it leaves the channel, I'm just looking at horizontal price targets, right? If a channel is not applicable, it doesn't get put on there. And so if I have, or I am in a channel and it correlates with a target that I am placing horizontally, that is a confluential target and that is my trade. But I do not overcomplicate it by trying to force anything on my chart. Okay, hopefully that I know everything that I'm teaching here is important, but there are certain things that outweigh others, and horizontal levels are irreplaceable. That is I could trade, just to put it in perspective, without them. I could, but it does help. So, all right. There you go, Junior. Nice. It's a good chart. These are just examples that I was giving you guys on said channels. Let's see here. Is the screen back up? There it is. And I wish it would automatically resize itself, but it doesn't. There you go. All right. So the main point here, I'm trying to show you guys, again, when we're going to go over. Yeah. You know what? If you guys have any questions, go ahead and drop those now. If you guys have any. Do you ever use broken channels to look for resistances, like you might use an old box? Yeah, I do. No, you're not getting ahead. So in the next slides, I'm going to be talking about how channels are created. Now, this is, probably another hour or so. So we're at a buck 40 as far as time wise. So I can answer some questions, or if you guys are all ready to go, we could start moving into the parallel channels. It's up to you guys. I'll leave that up to you. We can talk for another 20 minutes, and if you have any questions, if anybody has any questions, we can answer those. Or I like to kind of end the classes once we've finished at least one subject, so that way we're not getting too much information, mixed information. I've noticed a lot cleaner boxes on the weekly. Is that why you always check the weekly? That's a great observation, my friend. Yes. Yes. So I love that you brought that up, because this is why we start with the higher time frames, because the longer, like The weekly is a week of price settling, right? It is the strongest confirmation, right? Or the strongest levels. And like when I say that, I really, really like mean it, which is why when some people uh up, like for example, in this example, IWM, I got a lot of questions on whether or not they should take it up. I said we got empty space up to 221, which technically would be right around cost basis, but a 24-hour candle close above would have to be reclaimed, right? And the weekly candles, the tops and the bottoms of weekly candles are so very fucking powerful. It, it takes convincing price action to make them move. So, um, yes, in terms of finding levels, the weekly is going to be the most impactful and strong. I mean, I think this was a yeah, it was. And I brought it off the bottom candle low, but the boxes are cleaner, resistances are clearer. And this is why we start with top-down analysis. The strong, and even towards the end of the month, right? It's important to look at because you got to think it takes a whole month to get that candle to settle, right? So this is important because if price is looking to accomplish everything that I teach you guys for the 24-hour time frame is true on every. This is something that I couldn't believe. It took me a long time to even. I was like, nah, man. Like there's no way. There's a way. Every time frame. Don't believe me? I'll show you. Box. Struggle for the floor. Right? Struggle for the floor. Reclaim. Punch back. New highs. Retest. Punch down. Right? It's all the same shit. Box here, here. Oh, yeah, that's the box there, right? I don't know, actually. I think I want to bring that down and over. There's a lot of points of contact there, but it almost looks like your box is here. I make mistakes too. Yeah. So, same thing, right? Boxes, structure, it's all going to be. I mean, look at the wicks here on MU, all off of 6420. So, yeah, and this is I think when you start to really look from the weekly on down, you start to notice that, well, the weekly has ranges, the monthly has ranges, which just goes to show you that, like, yeah, sometimes it really is. Once you get done trading a stock, start like I've already said it like 9 times. I've had people DM me about it. I had one dude give me a long-winded message about how he missed Starbucks, and if there was any, it almost sounded like he was begging. Like, is there any chance I could get back in? Dude, that's gone. That's what I'm trying to get you to understand is that it's your stocks expand and they contract, and that's true on every time frame. So even there's going to be periods of time where even on you might have 2 or 3 months of no movement, right? A weekly or monthly box could be being created. And so if that's true, right, then we can acknowledge that waiting for our trades, or if something's not set up in the way that we like, we can move on and find something that is set up in a way that we like. So, to your point, yes, when we are weekly candles, weekly setups, monthly setups are going to typically provide the cleanest price targets, the cleanest floors, all the data is consolidated into a weekly or a monthly candle, which means that what that candle is trying to tell you is probably more important than what you see below you. The weekly is actually one of the only reasons that I still feel that if there's like next week, if we're going to go back up, we will stay in range for at least a week because of the rejection of the weekly floor yesterday or last week. If we were going to go up, and I always do this, like I look at what is the possibility and what is above and what's below, right? In order to confirm that. And on lower time frames, I have to. Um, but as far as like even just placing targets, if you decided you wanted to trade from down here up to the floor, I mean, that's a monthly, weekly floor. That would be a extremely solid target. So yes, I really like that you and hopefully a lot of you guys are seeing this. The weekly is where you find this oftentimes it's actually the places where you will find the targets you're looking for above you. Like on Disney, there's no question. If you can break over your current top, which are honestly the weekly candle looks pretty damn good, you should be moving straight to 123.86, and I would assume that that's what's likely going to happen if we see continuation of the upside. And then you would place your trade for 129.50. Clear, right? And you can do this on every single stock. Look, even just telling the story. Look at Starbucks. Floor. What are we trying to grab? Weekly candle. Friday. Close. Green. What's above you? Nothing. So, yeah. The weekly is an incredible time frame. All right. Any other questions, guys? Thank you, Ivy, for posting that in the homework chat. When taking a play at a weekly, what is the minimum contract you should be getting? Well, typically the weekly is going to take longer. So if you're identifying a play out there, you could be identifying what could happen in the short term. But yeah, ultimately, higher time frame it's typically going to mean more time it takes, right? And honestly, I think it's a great way to actually measure out like how long something could likely take. But for example, if I wanted Elf through this punch back over 134, 135, I would want to see a weekly, and I'm looking to take it up to 152. That's probably where we're looking for that break. PD, have a good one, man. Yeah, classic. We're almost done anyway, so there won't be much for you to rewatch. But yes, that's something that I would need to add contracts or time for. Now you could go to the 24-hour and let's say, you're here and obviously this had earnings, so this wouldn't be something that you could have actually done. But if it hadn't, with the floor there, if the 24-hour shows you that there's mostly empty space above you, you can factor that into what you're doing. Typically, if we're moving, especially through the weekly, up to or through structure, that's when absolutely, because I would take time anyway, even if it was the 24-hour, that a weekly setup is going to typically take longer. And just by the fact that most plays, listen to this, most plays that are taken on the weekly are taken on Thursdays and Fridays towards the end of that weekly candle close. And Fridays, to be more specific. So equity and leaps, weekly setups. That would be your main focus. For us short swing traders, right? There's got to be a hybrid word for that, but like swangers maybe might be a good one. But like we are literally swinging into day trading positions, and that's where we can target. And that's the part of my strategy that's opened up that I'm on. But there are so many different ways to utilize this. I mean, just with the last 2 years, I didn't know this until I looked at my account. There has only been one losing equity trade that I've taken in 2 years. 2 years, and I've taken over 20. obviously I don't buy equity a lot, but for me, and I don't buy equity in something unless I mean it, unless I feel really good about it. Um, and I'm gonna put at least $10,000 to $20,000 into that position. But I have not had a major miss when it comes to that at all. Yeah, well, really, I would say, almost for me, I'm more than happy. But buying equity is, I mean, especially if those of you who have capital, is it almost feels like I'm cheating. Like I shouldn't be able to do this, but it just makes everything that we do, you just take half of the option contract variables out, and it's just you get out when you got in. That's it. Didn't you just take a equity play recently? I did, yeah, INTC. That's too soon to call a loser though. I'm down 8%. It's not going well. I'm probably going to stop out this upcoming week because that rejection up there and the drop back into the top. Usual. Swangers. There we go. All right. So today's class, we got the one, two, threes, the waves, finished up on cost basis, and what that means to sellers and buyers. Um, and the next upcoming class, I'm trying to. I'll be honest with you. I'm trying to figure out what I'm gonna do because usually on Sundays I do my regular live. I think we might have to do that because of what's coming up this week and with the gap down and stuff. I want to see how futures open, so we might just skip tomorrow. Give you guys time to get all your homework out, and then Monday we'll. I don't have anything going on next week at all, so Monday through however long. Again, I'm not in a rush to get this done. Um, we didn't catch the I'm trying. Oh, did I cut out? Whoops. Um, yeah, I was trying to figure out tomorrow because Sunday I typically go live at 5 or 6. Um, and so I might, well, tomorrow we're gonna skip tomorrow because with this week, I keep forgetting it's Father's Day. But I appreciate that. I work on my birthday. I mean, yeah. But anyway, I appreciate that. Thank you. But um, I'm gonna go live anyway for because this week is important, just in terms of how we pulled back. I want to see how futures open, and take a look at how that's going to impact us going forward. Because I'm expecting with everything going on in the world that we might be losing some levels coming forward. So that's interesting. Also, I got to pass the. I bought two of those stupid funded accounts, and I made 40, almost 4,500 on the I made 4,300 on the second one. Yeah, I got two of them, dude. I was like, "There's no way it could be this easy, dude." I just want to trade my prop firm. So, no, I didn't get paid out. I just got it, but the first day I made 4,500. So, yeah, don't judge me as right. All right, guys. Yeah, good class. Make sure to write down your questions that you have over the weekend, or if you review this. I like NQ better. But yeah, we'll resume on Monday at 5 p.m. Yeah, no problem. Good class, guys. All right. Happy Father's Day to anybody in here with the kiddos. Appreciate you. Peace out.